Alrighty, traders, it is Friday, August 2nd, 2024. Don't always do a Friday wrap-up video since we have the weekend, but today was just one of those days where I think you got to make a video. So red screen behind me means market was down today, so we'll talk about that. So I want to talk about what happened in the market today. So what made the market sell off a bit? Why did it happen? Okay. How it unfolded today, and then what we did about it today. So overall, not a terrible day from a realized loss standpoint, but for a lot of people, definitely some losses today for many people that are premium sellers. I think we fared pretty well, so I'm going to talk about that. So why it happened today, why the market went down, what caused it. We'll look at a little of the timing of it. We'll talk about our trades and what we did about our trades today, which we just really just stuck to our plan. It wasn't a whole lot to do. We closed out 3 trades. We closed on oil trade and 2 ES trades. And I also closed out a hedge today. So 4 trades, that's it. We spent a little bit of time looking at the market. Other than that, it's just another Friday there with the market heading down. So let's talk about that. Markets typically don't bottom on a Friday, so we'll see what Monday holds. Who knows? But let's get into it. Let's bring up the charts and let's start taking a look at that. And then we'll talk about our account after that, if that makes sense to you. Let's get rocking and rolling on it. All right, so here we are with the chart of the day. ES, as you can see, was down a little over 2% today on ES. SPY itself was only down 1.84, but ES down 2.23. Oil down 2.84%, so pretty good down day in oil. We'll talk about that later. And then NASDAQ was down 2.4%. Russell down 3.5%. All right, so let's talk about a lot of things going on here. And we'll keep it easy. It's a Friday. We all want to relax and enjoy the weekend. But on the weekly chart, pullback continues. So 3 weekly pullbacks, kind of like what we had back in here where we bounced off the 21 and moved higher. This was 3 weeks jumped. Now this one was really about 6 weeks down till we bottomed, and then that uptrend began. So will we bounce off the 21 EMA here? Has yet to be seen. We're going to find out next week, but I think we have a bit of a support level. This was the level I called a couple days ago. So I said this is where we'll be looking, at least for the first support here, is right around this 53.30 level. And that's kind of close to where we ended up today on ES, but right at the 21 EMA, right at the support. We broke this uptrend line. MACD bearish, RSI is bearish, squeeze rolling over, downtrend 3 weeks in a row, triggered a PSAR bearish signal. So nothing good, all bearish on the weekly, but we're at the 21. If we take a look at the daily chart, pretty good down day today. Re-triggered the bearish PSAR that we had been in. We did break the 50, which is where we had held sideways for a while. We finally broke this 50 to the downside. So the downside is definitely in play. I thought maybe we could get a little bit of sideways move, but the economic indicators were not having any of that today. Let's get in and look at the, excuse me, my voice still a little scratchy. Let's just look at what happened intraday, if we can, and we'll see what happened, why it happened here on the session if we look at the whole day. So what happened first off in the morning is, you could see that yesterday it sold off decently, had a little end of day rally. Well, that rally at the end of the day didn't hold up at all. Gap down this morning. Now right here, and this is futures. So you can see right here on the futures overnight, we just started drifting lower, lower, lower. Right here at about 9:30. This is SPX. Let's get into futures. I was on SPX. Futures is going to be a lot more exciting and a little bit more interesting to take a look at. So you can really see what happened on the day. So you can see as we were heading in, right around 8:30 here, big red candle drop. This is when the non-farm payrolls and unemployment rate info came out. And One of the things we know that now is that good news is now good news and bad news is now bad news because the Fed is looking to make their cuts. They announced they'll probably make at least a cut in September. Some people are thinking that that cut's not going to just be 25 basis. It could be 50. It could be more based upon what's happening here today, but it's a lot of speculation and there's a long way to go. But we sold off heavily on the fact that non-farm payrolls just dropped like a rock. They were expecting 176,000. It came in at 114. Huge miss on the non-farm employment. And then when we look at the unemployment rate, we were expecting 4.1%, and it jumped to 4.3. So now there's a little concern that, okay, did the Fed wait too long before they adjust? Typically, they wait too long before they cut, and they wait too long before they raise. Okay. They can't be perfect on it. I give the Fed a little bit of a break here, but I think it would have been prudent to probably make the cut now, but it is what it is. But we had a giant drop right here at 8:30. Now, based upon that, markets kind of sprung back and recovered, half of that move until about 10 o'clock. And then right at 10 o'clock here, and you'll see right in here, it's hard to see, but let's just see if we can squeeze in. Right here around 10 o'clock, the factory orders report came in, which is usually not a huge report that moves the market, but this report absolutely moved the market. So right at, huge drop at the open here, and then a huge drop right at 10 o'clock. Massive selling came in when factory orders missed big time. So factory orders dropped 3.3%. So they dropped 3.3. Last report, it was only a drop of 0.5. So this is a massive move to the downside on factory orders dropping. That now starts to bring up recession fears. So we've got unemployment starting to rise a little bit faster than expected, and factory orders dropping more than expected. Now the recession talk is starting. Okay, with the Fed making their cuts, now they're thinking, okay, if things are normalized from a Fed standpoint, bad news really is bad news. So unemployment rising is actually bad for the economy. Before it was good because we were hoping the Fed would cut. Well, we know the Fed is cutting. Now we're worried that the economy might be going into a recession, which I still think is going to happen. I expected it to happen last year. Or this year, earlier in the year. It didn't. But I'm still going to stick to that at some point, and maybe I guess it's next year now. Maybe it'll be first quarter. Who knows? I still think this economy is probably headed to a recession. Don't think that this is the start of it, but who knows? Now, we did sell way off all the way down here. Had a nice bounce midday. Things looked pretty good. Another sell-off, a little bit of a rebound, and then some selling at the end. So really the markets just never got anything going off of this selling today. Did recover off the lows, which is a good thing to see. So we did finish off the lows, but we did finish on a pretty good 1 hour sell-off. From about 53.77 to about 53.57. So about a 20-point drop in the last hour for the Fed. More interesting, I thought, today was the action on the VIX. So if we look at the VIX here today at the open, this thing screamed higher. So VIX closed yesterday at 1818, benign, nothing exciting. But within about 2 hours, an hour and a half of the market open, VIX was already up to almost 30. So it went from 18 to 30. Not quite a 80% rise, but probably pretty doggone close to an 80% bump. And then it just tailed off throughout the rest of the session. So VIX was the big story, I think, today. I think that was a totally uncalled for response by the VIX. I don't care if you think these reports were good, bad, or upside down. And earnings maybe not great. Apple earnings pretty decent. Amazon earnings not great. They kind of offset each other in my opinion. So earnings just kind of a meh week of earnings with the big caps. We still have Nvidia to go. But I think the big news was a little unrest in the Middle East. I don't think that's affecting anything here. at least not yet. But I think the fact that unemployment is maybe on the rise, maybe the economy is slowing a little too much, that could be signaling a little recession. Maybe the Fed waited a little too long. So I think these fears really crept into the market, but the move on the VIX was absolutely absurd. So we can see here if we go back, we haven't been at this level on the VIX since way back here in March on a little couple week spike that we got up. But really, VIX, this is a gigantic move today. I'm not sure what the reasoning is for such a huge move. I get the employment report. I get the factory orders. I get maybe things are a little overbought, but I think this is ridiculous. But what happened here on the VIX, and if we look at the VVIX here, I mean, this is one of the highest levels the VVIX has been at for a couple years now. I'm not saying that that's the end, but this was a pretty good out of control signal here, and then we finished off the highs. But this level here typically is about as bad as it gets on the VVIX. Now, could it get worse? Absolutely. We'll keep an eye on things. We talked about the put call ratio, a week or so ago. That was, in my opinion, was really, oops, I mean to trade anything. I really thought that this was the signal that we got right back in here when we hit this low. This was back on July 17th. To me, that was almost the mark of the top market high, but it was also the mark of the put call low, and then it started to swing higher. And as this thing swings higher, the market tends to drop. Okay. How far is that market going to go? I don't know. Maybe we have some support in here. Okay. As we look at this, maybe this support line here is going to be the spot. We had some support here, which we kind of held today for the most part. Got some gaps to fill, but put calls rocketing higher. Markets are going to keep going lower. Pretty good indicator, pretty telltale sign. We really warned our members about this a week or so ago. So hopefully you were prepared as we've called this out a couple times for everybody. So double whammy today with markets selling off and the volatility just skyrocketing today. That was really the main pain. None of the trades are in trouble from a move standpoint. It was all volatility. So huge move in volatility today really put a hammer to things. If we take a look at oil, pretty good selling day today, which is unusual because you've got some potential tensions in the Middle East, but you also do have OPEC nations, number one, not following through on any more cuts. Okay, they're going to keep pumping. So OPEC's going to keep pumping. That's going to drive the price down. And then China on recession and slowdown fears in China, not buying as much oil, potential recession fears in the U.S. That's all going to push oil lower, and a pretty good blow-off move today. Does that mean it's going to reverse tomorrow? I don't know if it reverses on Monday or not, but maybe a little bit more downside to go. But certainly this oil is driven, I believe, by mostly the China-U.S. potential recession and economic slowdown fears, as well as in some other countries, I think, just pulling back. And then OPEC is not going to cut anytime soon. So anyway, there's where we are in oil. Did cause us to get stopped on some naked puts on a 112 today. Okay, we've had a good run in oil. I'm okay taking a loss that was measured. Now, on the other hand, you got bonds cranking. So we had some trades on bonds. I have been long bonds for quite a while. I have been telling you to get long bonds. We've been adding notes. We've been adding TLT. We've been adding bond trades. We do have a couple strangles that have been working for a little bit of time. But overall, I am extraordinarily bullish on bonds, not just because the Fed's cutting, but if we look here, and this is the 30-year, okay, which people say, oh, the 30-year is the far end of the curve. That's not going to be affected by the Fed cuts. Okay, well, tell everybody that traded bonds today and watched yields just plummet. And if we look at the yields as well, and we can look at TLT, moving up. We'll see if we can pull yields up on the 10-year in a minute, but let's go back here. Take a quick look at some of the other things. We'll look at gold. Gold just kind of hanging out, doing nothing. Good trade. The Aussie dollar just sideways, which is what we said we thought would happen. Here we're starting to see maybe a little bit of bottoming on the Aussie dollar. If we look at the euro, big move up today, big push on the 6E here. Nothing crazy to deal with. The NASDAQ here continuing to fall down in this little bit of a megaphone type of pattern that we got working here. And the downside looks, still pretty ugly for big cap techs. We look at RTY. We were in this volatility box here for a couple of weeks, broke below. That doesn't look good for the small caps. I know Tom Lee says this stuff's going up 40%. Well, it's going to have to go up like 100% from where he said it was at this rate, because right now RTY looks ugly. Staying out, no trades for me in that. And then if we take a look at notes, I mean, again, these just taking off and moving, way overbought. I mean, way overbought on the daily. Same thing with bonds. Okay, way overbought on the daily, but these can go potentially higher. But I think we're getting to a point where maybe we'll see some chill from the bonds. But so there's the markets. That's what happened. If we look at most of the sectors today, most of them down. Semiconductors, okay, getting smoked to the tune of essentially about 16%. Oil down 5%. The XLY here. Oops, I don't have this tied to any charts right now. XLY, KRE, all down. XRT down. Retail down. Tech down. Energy down. Financials down. Biotech down. Okay. The only things up today: real estate, utilities, and the XLP. So not much going on in most of the sectors. So we'll kind of turn that off. And then I don't want to get into individual stocks today, but Apple was up. Costco was up nicely today, and I love Costco. Okay, I think this move down to the 21 continues to get bought and bounce, and we're right at the line again, and we're right at the 21 on the weekly. So I like Costco where we are here. So I think it's a good looking trade. We'll see what happens. Nvidia had a down day, but it wasn't the worst thing on Nvidia. It's just sitting right at the 618, which is an interesting level for Nvidia to be sitting right almost at the 100 move. We're at 107. It's not a bad spot here. We got earnings coming up, so we got to be a little cautious. Okay. Other than that, that's where most of the trades were. And then anything else that was up today: Square was up, McDonald's up, healthcare with UNH screaming to highs, J&J screaming to highs, Abbott Labs screaming to highs, Visa screaming to highs. Everything else down pretty good. Watching Hood here. If people were in this thing, I know Kathy Wood was in, but maybe she got out recently, or somebody. I don't think she got out of Hood necessarily. And also I love just watching Bitcoin here. I think Bitcoin's just hanging in there pretty well. Nice pullback, giving some opportunity for Bitcoin. And then if we look at CrowdStrike here, just to keep an eye on how this disaster is unfolding, it just continues to fall. I don't know that all of the news and lawsuits are out on CrowdStrike. So there's where we are on a bunch of different stocks and a couple different types of trades. This China trade also not looking good. So no bueno here on China, a little outlier day there. But you've got a falling wedge pattern here. This thing, looked maybe this was going to be the break, and it wasn't. And then we're still struggling with this thing. So right now, nothing to do on China. All right, let's get into the account and just wrap it up for you guys today for the weekend. Here's where we ended the day today, 929 on Delta. So Delta did drop today. Now, obviously, we did unload a couple a couple trades, but overall not bad for Delta. We're dropping, so Delta should be continuing to increase, but good Delta 0.21, we're fine. Theta 1959.44%. And when you get a VIX of 25, this is where you should be. So if we're at a VIX of 20 to 25, now I expect the Theta to be at this level. Here, net lick drops a pretty good amount today. So we had a drop in net lick. BP usage also dropped a good amount today, which was nice to see. We didn't change any of our bill. We're still sitting at 55% of our buying power in bill. However, the big damage today was that we closed out a couple trades. Here, let's take a look at what we closed, and then we'll wrap it up. 4 trades closed on the session. So after yesterday, cranking out a great first day of the month, and we reversed a little bit of that today. We had one of our hedges. This thing expired today. I actually was able to close it for a little bit of money before the close. So actually made some, I shouldn't say made any money, didn't make any money on the hedge, but we did lose less than having that hedge expire. Here's that oil naked put of a 112, took a loss on that. But again, these losses are all very small. I mean, you're talking a $3,700 loss on a $530,000 account. Okay, so not a big hit overall for that. Then we did take 2x losses on 2, and we were just a little bit over because it was tougher to get out of these trades. Plus, I was doing some videos with members as well. So 2 different naked puts were stopped today, but again, both of these only about 2% of the account. So 13,000 on a $520,000 account or so, it's a little over 2%. So 2.4%, 2.5%. So overall, maybe a 5% loss on the day, and that's it. So we got out of 2 potentially troubled children here, and yeah, we'll take the loss. So it's a good size loss for the most part, but we're still up 20, still only down 2,400 for the month. And last month we made 25,000. We're down 24,000 on the month. Okay, but that's not a great amount. 24,000. Again, we started around 530. So we're down 4.5% for the month. Actually, we can probably put this formula in as well. So let's take a look at the formula here. And okay, so yeah, we're down 4.6% this month. Not too bad. We're still up 22% for the year. S&P is up only 12% now. For the year, we're averaging over 3% a month. It's perfectly in line with the plan. We still have booked $93,000 in realized gains. So that's really where we're focused at. We focus on the realized gains and losses, because the net lick can go up, it can go down, but all that matters is when you close the trade. And we don't really have a whole lot more that's in trouble. We'll see what happens if Monday's another repeat of today. We might lose another trade or 2, but really, I think that's not too shabby. So we lost 2 trades. We'll take it. Those are the first 2 losses on long-term 112 trades that I've ever had since doing this strategy for 4 years now. So the first 2 losses in 4 years. Not even in 2022 did I have a loss on a long-term 112. I did have a loss on a 111 trade back in 2022, but we took 2. Yeah, that's a pretty good run. If I have 2 losses every 4 years, I'm gonna be pretty happy. If I have 5 losses every 4 years, I'm gonna be pretty happy. If I have 10 losses every 4 years, I'm gonna be pretty happy. So overall, don't look at your net lick. Okay. And let me give you 3 things that I told our members today, because what matters is watching your individual trades and managing what you see and managing the trades. Don't be fretting about where your net lick is, because that really doesn't matter. Okay, right now, what matters is where are your trades. Okay, now we have put debit spreads on, we have hedges on. We've had those all working. We just have more put debit spreads on than we've had. But I'm going to give you 3 things. These are my 3 takeaways for when the market starts to sell off hard and volatility is cranking like it is today. And again, this is a once in a decade event in my opinion, where the market would drop 2.5% and volatility would rise 60%, 50 to 60% in one day. Craziness doesn't normally happen. So if you stuck to your plan and you got out, fine. Some people thought, well, since the volatility is up, maybe it'll revert on Monday, and they didn't get out. Maybe they'll get lucky, maybe not. To me, I just stick to the plan because who knows what could happen over the weekend or Monday. If we go lower, their losses are going to be even greater. Okay. If we go higher, okay, then they'll be okay, but I'm okay as well because my account will rebound as well. But I'm going to give you 3 things to take away on days like today. Number 1, do not look at your net lick. Okay. Very important. Don't panic. Don't look at your net lick. Just look at your individual trades and deal with those. Okay. I had to deal with 2 ES trades and 1 oil trade today. Unfortunately, everything is going the wrong way at the same time. Okay. Oil's going down, not helpful. Okay. ES is going down, not helpful. Bonds going way up fast, not helpful. So when you have that kind of confluence where everything is just going the wrong way, it's going to happen. Don't look at your net lick, number 1. Number 2, I'm going to ask everybody here, don't look back next week at your trades to see what would have happened if you had left them on. Okay. I guarantee you volatility is going to revert. It always does. Okay. Price doesn't have to, but volatility does. And write that down. Volatility will always mean revert, but price does not have to. Okay. So write that down and remember that. Volatility it's already reverted today, okay, from close to 30 back to like 23 and 23.39. So we were up. Volatility was up. VIX was up over 60%. It ended the day up 25%. So half of VIX dropped by the end of the day. Okay, but don't look back next week to see what happens. If I just held on because it was a volatility spike, you'll do it. And what you're going to do is A, make yourself mad, and B, you're now going to trade emotionally. The next time this happens, you're going to see a vol spike and you're going to think, you know what? I'm not going to stop out because last time I stopped out and volatility changed the next day. Okay. Well, maybe volatility does revert on Monday and all of our trades would have been good, but we're not going to look back because you got to have the memory of a goldfish. Okay. But if you do it again next time, you don't know that volatility will revert. Maybe it gets worse the next day, and now your 2x loss is a 3 or a 4x loss. Okay? You got to stick to your plan, trade your plan. And the third thing I want you to think about is don't try to hop back in. Don't try to revenge trade, because what that's going to do, okay, is force you to put on bad trades in a bad market. It's emotion-based trading, and you should stay away. Yeah, the premium was great today. Yeah, it was so juicy. You wanted to trade another 112 or sell naked puts or something today. I think you just needed to chill out and let the market do what it's like. We lost 2 trades. Okay, it's the first 2 trades of the year. It's the first 2 trades of 4 years for me on a long-term 112. I'm all good with that. Okay? We still have a phenomenal win rate going, so I'm not going to worry about it. But if you keep those 3 things in mind, you're going to be a better trader. And you're going to be a better trader because of days like today, which really makes you think and really makes you have to stick to your plan. And if you did that today and you stopped out at a 2x loss like you should have, okay, and you didn't just hold and have hope that it's going to change tomorrow, then you're the better trader for it. Okay, it's going to pay off for you long term. Okay, don't worry about what anyone else is doing. Tune them out and trade your plan. All right, if this was helpful to you and you like this video, click the like button down below. As usual, you can drop comments in the trade. So, yep, I'll show my losses. I show my wins. I show you guys everything that I do live. If this is helpful, okay, share these videos with other people so they can learn, get better at what they do. Just know that, hey, we're all out there trying to trade, trying to make money. And most of us that are selling premium, especially in 112 today, a couple of us took some losses. Okay. Now, the one thing that I also want to bring out really quickly is in my IRA where I trade 111s, 0 stops. Okay. So the 111s very resilient today, obviously, because you don't have as many naked puts. and volatility didn't hurt you quite as much for that. However, do you want to make 1.5% or do you want to make 3% a month? Okay. I will take a 4% loss today and still make 3% every other month, 3% a month. Okay, that's my plan, as opposed to making 1.5% a month every month. Okay, with not many drawdowns on it. However, but for an IRA, I want that smooth, lower return. In a trading account, hey, this is trading, folks. We got to put the money in there, and as my buddy Tony says, you got to risk it to get the biscuit. All right, take care, everybody. We'll see you later. Have a great weekend. We'll see you Monday. Bye-bye.